Hello and welcome to another brand new episode of What the FinTech, the podcast from the team behind FinTech Futures and the Banking Technology magazine. My name is Paul Hindle, editor of FinTech Futures, and for this episode we're joined by Simone Löfgen, Global Head of Payment Platforms at Commerzbank. Simone, welcome to the show.
Thank you very much. What a pleasure to be with you today. And I'm very much looking forward to discussing current terms of payment with you today.
It's great to have you here. And just to get started, would you like to quickly tell us a bit more about yourself and your career so far then?
So I'm responsible in Commerzbank for our payment platforms, which include the more traditional rails coming from SEPA more now into instant payment, as well as our cross-border rails with SWIFT. Apart from my internal role in Commerzbank, I'm also the chair of the eBay Clearing Board and as well the chair of the German National Membership Group for the SWIFT banks. So also quite a broad view into the market and looking forward to exploring those current developments with you today.
Excellent. Sounds great. And again, great to have you here. And thanks so much for taking the time out to speak with us today. On the show this week, we'll explore the key trends, challenges and innovations shaping the payments industry in 2026. We'll look at the current state of play with payments in Europe, the impact of evolving regulations, and the opportunities and challenges in cross-border transactions, including the role of stablecoins in the future of CBDCs like the digital euro. We'll dive into how AI is transforming payments from enhancing systems to combating fraud and hear how Commerzbank is leveraging this technology. And we'll also look at how banks can balance the customer expectations for fast, secure and transparent payments with the growing complexity of payments infrastructures. And of course, what's next for the industry and what the growing conversation around payments sovereignty might mean for the future of the European payments ecosystem. So to start off with then, Simone, how would you describe the current state of play with payments in Europe then? What are the big changes you've seen and what are the big trends you're seeing currently?
European payments are indeed at the moment in the middle of a structural upgrade. So in the past, we used to say payments are the machine room of a bank. It's the plumbing, the wiring, and etc. So nowadays, with the current developments that we're seeing, it actually very much reaches the boardrooms and discussions around the digital euro, European sovereignty in payments is present in every discussion that we see. So payments have always navigated the triangle between client requirements, regulation, and technical developments. Whereas in the past, technology used to be quite a limiting factor with regards to what we can do in payments. Nowadays, it's actually shifting and offering more and more opportunities as we go. Let's take, for example, DLT enabling full new use cases, etc. So, but then the question is, how does that reflect to client requirements and regulation at the same time? So you always try to balance those three aspects when it comes to payments.
Yeah. And you touched on the regulation aspect there. What kind of impact is the evolving regulatory landscape for payments having at the moment? What challenges or opportunities are being presented there?
It's definitely one of the driving factors for the past year. So it really started with the ISO 20022 migration when we increased the data and the structured data being sent in payments with new formats. So that was one of the projects in 23. And then we saw the instant payment regulation, which kind of set a new level playing field for the speed of payments with regards to instant being the new normal now across Europe. That all is now topped with discussions around the digital euro as a central bank-driven payment method that's going to be put in place over the next years. In addition, other regulatory aspects that we have are the payment service regulation, which is still currently under discussion, but will also once again shift the ideas around open banking and availability of data and access to banks and services, but also looking more into the fraud aspect of things, how that can be prevented as an industry, but also shared liabilities between players in the market. And all to round it up, we also discuss a lot about resilience. So DORA, the Digital Operational Resilience Act, is something the more cloud we use, the more third-party applications we try to clump together, the more the aspect of really resilience of your whole system comes into play. So you see a full load of regulation which come with challenges, but also some opportunities. I think they're all done in the best intent. But the problem always is about the prioritization. How will that fit together? How can you develop business models from those regulations and build upon a stable foundation to make your business model successful?
And with different regulatory approaches across different global markets like the EU, UK, the US. What are the implications for cross-border payments there, particularly in terms of harmonization and efficiency?
It's a very, very interesting aspect because I often also discuss with banks from other regions. And as you were saying, other markets, other like the US, having a totally different approach. They position very early on. They don't want to have a digital dollar. So they rather went the way with the Genius Act now, creating a stable regulatory background for stable coins evolving. Whereas, for example, Europe very early on had a very positive stance on central bank digital currencies, and the digital euro now being the first project that's likely coming into effect with that. I think the UK somehow plays in the middle, so really trying to explore the best of all worlds. I think maybe also Asia, because Asia also has a different approach to some of those regulatory aspects. Taking the MAS in Singapore, for example, they are very much open also in exploring new technology and ensuring that the use cases that are being put in place are created on a stable foundation in the regulatory framework, but that's rather to enable technological development instead of preventing it.
So on the topic of stablecoins, they've gained significant traction recently with a particular focus on their role in cross-border payments. What's your perspective on their role in the future of international transactions?
It's definitely a very interesting development. So we've seen cryptocurrencies over the last years, and I know on top of everybody's minds is Bitcoin, which I consider personally more as an asset class and a traditional way of payments, but with stablecoin and the value of the token really being linked to a stable underlying that offers really interesting opportunities. And it's one of the examples where I say it's a very good way on using a DLT for programmable payments, which offer 24/7 settlement. They are programmable, traceable, so fast. So there's a lot of very appealing advantages. But there's also the downside, because a stablecoin will work in the respective network. And network standards and reach are one of the main factors when it comes to payments. So I'm only as strong as my network. I need strong banking partners to be able to execute payments to all countries globally and having that reach. I'm still wondering a little bit how that will finally play out with different networks of stablecoins and the question around interoperability. But I'm clearly convinced it is here to stay. Will it necessarily replace all the existing rails we have? I don't think so in the near future. So it will be rather something on top than instead.
As we've been talking about regulatory approaches as well, what are the key challenges regulators face in defining oversight for stablecoins, and how might this impact mainstream adoption?
So I think one of the challenges is really to understand those different rails and how they are governed, and ensuring that you have the same rules for traditional networks and also new networks. I think at the moment, some of those rails, they profit from a certain regulatory arbitrage, but I'm very certain that gap will be closed from regulators over time. A lot is about learning and understanding the technology, also for regulators. Those are new developments they need to look into. They need to find a clear stance. They want to be supportive. I'm in discussion with a lot of different regulators, being at ECB or other central banks. I think in generally very open-minded, but it needs to be ensured that all of that is done in a clear regulatory framework that gives us and market players security for our investment, but also ensuring that consumers, companies are protected, that the rails are secure, that they are not open to fraud, that the same requirements on anti-money laundering, etc., are being employed so that we prevent any pollution of those networks.
So what would you say is next for CBDCs then, as they move from experimentation toward clearer cross-border use cases, particularly the digital euro?
So we're definitely expecting, we see discussions, we're following with the ECB, the next phase on the implementation project for the digital euro. A call has been going out currently to banks to apply for the pilot phase for different use cases so that you come from a playground experimentation now really to the real life experimentation. We have seen something similar with the wholesale CBDC, with the ECB. They started with conceptual work and then went into a phase of trials and experiments really involving banks saying, okay, what are your use cases, bringing in market infrastructures, defining those use cases. And that, for example, has now led to the ECB strategy and evolving from Pontus, which is sort of building the bridge between the old and the new world, to Apia, which is likely a new DLT-based infrastructure, enabling also central bank-driven, for example, changes in securities and payment at the same time. So really having DLT-based improvements for the asset leg, but also the cash leg in combination.
From the consumer side, the discussion around CBDCs often centers around privacy and trust. What's your take on that? And will they ever fully gain that trust and hit the mainstream?
As you said, it's trust, it's privacy that are really important for consumers, not oversharing any data and making sure that they have the same level of anonymity as with cash. Of course, in a digital world, everything will leave traces. So this is why the emphasis on privacy by design is really important. And it's about trust and also consumer experience in the end that will determine if those rails of the digital euro will be successful, if it can be really a seamless experience for customers. And I think that is the aspect where some of the challenges are nowadays, because when you compare, for example, you are at a point of sale and you want to pay, at the moment, it's very, very easy. You take out your phone, you use your Apple Pay. It seems very seamless. It seems very private to you. I think the repercussions on using US infrastructure in the background is not on every consumer's mind in that very particular moment of payment. So I think understanding what are the differences and creating that positive customer experience will be very important for these new rails to be successful.
Building on that, one of the big topics at the moment is European payment sovereignty. How do you see this concept influencing the development of the European payments ecosystem?
That is an interesting aspect when you need to look into those from 2 points. So one aspect is really when you pay at the point of sale. Because there, the traditional rail are cards, it's Visa and Master, which are, as said, very much yes dominated, or using your mobile infrastructures, which also contain a large portion of non-European technology. So those are the influencing factors. When you look into the real payment infrastructure behind that, for example, our whole SEPA infrastructure, that is all built around European technology, European service providers. So that is very much already European governed. The same, for example, with instant payments, with the target instant payment settlement system from the ECB TIPS. We have a perfectly well-functioning full European infrastructure under central bank governance, which is working very well and already achieving that trend on having faster payments overall. And even in the cross-border space, everybody looks into SWIFT and thinks about, okay, there's a payment system. Actually, it's a telecommunication system, first of all. And the second is, it's a European company. It's incorporated in Belgium. The seat is in Low. So once again, I think there's sometimes more Europe in our payment rails than we might see if we would only consider that from a card rail perspective, where it's true, it's very much governed around US companies.
So I guess, how do you see that evolving then if we look maybe about 5 or 10 years into the future? How do you see things shaping up there?
I think one important aspect already is the European Payment Initiative and WERO, as we call it. So that is now a payment method that is based on instant payment. Once again, full European governed, full European owned, which will offer you alternatives from a private market perspective already for use cases Its life is peer-to-peer. It will evolve now bit by bit also to e-commerce, to point of sale. So you can see that trend fostering new innovation and also new solutions being very much European-centric. But the question is, if you still love your iPhone, will that prevent you from buying your iPhone? So I think there's different aspects to that question than only payments.
So moving on to another big topic then, AI, of course. What impact is the growing role of AI having on payments at the moment, and how is the technology being deployed and utilized there?
So AI, definitely, it's a big enabler, but it's also one of the largest risks we're currently seeing in payments. So let's start with the dark side and then moving more into the light. So as you know, a lot of the deep fakes nowadays, it's very easy to simulate. When you are the victim of a scam or of a fraud, it's very likely nowadays that you can automate these schemes much easier with AI. So that is definitely one of the largest risks that we see. I've attended a conference last year and they had a dark stage where basically ethical hackers demonstrated what they did basically. And one guy showcased a page from the darknet and said, okay, they have a help button. So fraudsters actually offer you customer service. Not even the mafia does that. That was kind of a big laugh, but I think it gets us into the idea what that means. So you can really automate these scams. So on the positive side, what we as banks can do is leveraging AI now also to enhance our fraud prevention mechanisms more and more, but that will lead us to a war of machines. So one side will ramp up and the other tries to follow. So it's a little bit of a race who has the best tech and the best adoption models. In terms of AI in general in payments, so apart from the fraud risk and prevention, there's a lot of benefits for customers going forward. So all of that starts with data. So payments data, in most cases in banks like us, there's the most data points you have around customers and clients. So you can actually use AI now more and more if you agree as customer to fine-tune your product proposals, but also enable your cash management for corporates, much easier to project liquidity, to enable you and bringing you more into that 24/7 liquidity steering model. And for us as banks, it helps a lot in customer service. So as Commerzbank, for example, we have launched last year our first avatar. So that's your very personal digital customer agent. So you can talk with her, you can ask her questions. She can also operate some of the things that you do. I think it's the starting point. So coming into this aspect of agentic AI, where you have your personal assistant basically looking also into your financial health. So that is definitely one of the developments going forward.
You mentioned the fraud aspect there as well. How can banks and payment platforms stay ahead in terms of the arms race then, I guess, when it comes to AI-driven fraud?
One of the most important aspects here is collaboration. As I was saying, so for us, data points are very important to feed the algorithms, to train the machines. But for example, when you as a bank only approach that from a very singular perspective, you are limited in your data points. So it really comes with collaboration and industry-wide collaboration. So for example, what we did at EBA Clearing, we launched a system called fraud pattern and anomaly detection. So that gives you certain ratings and likelihood of fraud. It will not tell you if something is fraudulent, but we as banks, we can consume that data, fine-tune that, bring that into our own model, and then help really refining our fraud prevention. So collaboration is really essential in fraud prevention, and it really needs to be considered as non-competitive because this is an industry challenge we can only tackle as a community and not as individual banks.
So what other considerations should banks and regulators as well keep in mind as AI becomes more deeply integrated into payment systems?
And once again, it's a very good example on where Europe starts with regulation. So where other communities still were looking into how can we embrace AI and foster those positive aspects, I think the EU started was, okay, let's set the rules straight first. I think that's a good point. And over time, one aspect that will be quite interesting from a legal and regulatory aspect is when you, for example, look into more agentic use of AIs and when agents starts to execute payments, for example. You might have heard about agentic commerce. So this is definitely one trend when your shopping agent, for example, starts to buy things for you and then also have access to different rails of payment. So what will happen if that is fraudulent? What will happen if that is exploited? So I think there is still a big question mark in all our legal departments and how you can actually judge the responsibility of such an AI and who's responsible, which liabilities you will have. I'm quite convinced that this is something that will need to be considered to set those ground rules for a development that's already in motion.
Yeah, and you mentioned agentic commerce there. That's something that's been in the headlines a lot recently as well. What's your take on that and what's next there?
I think the way people are searching is transforming with AI, and I see it myself. I used to consider myself a Google expert, so I Google basically everything. So when I travel, I Google and so on. Already in my private life, I shifted now much more in using different AI models, for example, for traveling. So I want to go to Namibia. What are the best places? So please give me a route and the places to go to. And the next step on having that AI booking your rental car or your hotels, etc., it's just a tiny, tiny step. So it's quite natural to think that as an evolution of the way people are searching for information for products, then also to executing. So I'm pretty convinced that will come. But once again, it needs to come with a certain rule set. How do you prevent that you are actually trapped in information that are not viable and maybe the AI doesn't recognize?
You've touched on a few things already, but how has Commerzbank approached its overarching AI strategy then?
So we started a lot with the cultural aspect to defining our AI strategy and rule set. Then a lot was done, for example, with our Workers' Council, which is very strong in Germany. So to set these rules, so how can you socially responsible interact with the AI? What are limitations? What can you track? What can't you track? So all of that, we did that. We started launching our own in-house model from last year. So enabling people to get used to that. And it might have been minor use cases at first, like translations or refinement of emails or whatsoever, but evolving over time. So I'm working in the part of our organization, which we call delivery organizations. So also we're creating software. So we're working with code. And here AI has been quite powerful over the past months, helping our IT developers, for example, working on code, analyzing code and scripting much faster than we used to. But it's very important that in our perspective, really the philosophy is keep the human in the loop. So not yet to automate fully, but really using it as an enhancement of human actions, not yet fully replacing that. Bit by bit, we expect that to come more and more, specifically looking into process steps that are very much repetitive or easy to control. So more into that people are managing agents that are designed for certain purposes. So that is in the progress. I think we're not there yet. I think we're still at the level 1. So human with enhanced AI for certain tasks.
Before we look to wrap up here today, then, despite the increasing complexity of payment infrastructure, customer expectations for fast, secure, and transparent payments remains constant. How can banks and payment platforms ensure they meet these expectations while also balancing the expanding technical complexity, the shifting regulations, as we've been mentioning over the podcast today as well, and that need to innovate as well?
At the moment, it's really important to have a very clear IT strategy and to understand what is changing. Because as you were saying, the rails are getting more diverse. It gets more complex. There's a risk of fragmentation. So even when we say payments were complex in the past, the bad news is it will even get more complex in the future. So having a very clear IT strategy, being on top with your technology adoption is really key, because what you will need is sort of an orchestration layer that enables you really to utilize different rails for different use cases and still not lose efficiencies and connectivity to your core bank and your core processes. So it's a little bit chicken and egg. So what comes first, the new technology combined with the old one? But it's really crucial to understand those flows and have really good process designs, because otherwise you will have a zoo of different applications all left and right. And when there's updates, when there's change in regulation, you will really be trapped in that complexity. So really think beforehand, get your IT strategy straight, and ensure you have that really clear orchestration layers are some of our main focus areas at the moment.
To finish off then, we've mentioned a few things over the course of the podcast today, but how do you see the payments landscape evolving over the next 5 years or so then, and how can banks ensure they're not being left behind?
So for me, definitely instant is the new normal. So prepare yourself for 24/7 instant world. Ensure to get ready for the adoption of the digital euro use cases that will come, and also ensure that the cross-border rails are seamlessly integrated in your customer journey. So still, this is one of the most exciting bits and pieces, and we're seeing a lot of established challengers now aiming into the direction of cross-border payments. I think traditional banks are also in a position to regain part of the market share here. And some of the initiatives that are out there, for example, instant payment, cross-border, they will all help in that direction. It's really important to start with customer perception, customer expectation, to get that right, to integrate that in a seamless customer journey.
Thanks again, Simone, for chatting with us today. To close out the podcast, we have our now infamous FinTech jails. This is where we ask for an industry term, buzzword, or trend that you've seen or heard enough of, or of course you can advocate to free one of the previously incarcerated terms. So what would your selection be for this week?
It's a very interesting list of inmates you already have, and I would like to add one, which is decentralized finance, DeFi. Because in payments, when we look really into efficiencies, its standards, its network, when we look into decentralized finance, it's a little bit of the opposite of what we want to reach. So while the idea and the concept, I think, are very valid for us, really scalability and standardization are the way to go. So I would send DeFi to the FinTech jail.
Yeah, it's an interesting one. And I guess if this goes into the jail, then are you confident that centralized finance, as it were, can cover the hole that's going to be left by that then?
I think so, yes, I think. And really this operational aspect on interoperability, and that all comes back to collaboration. In the end, we're only as strong as our networks.
Excellent. Well, thank you, Simone. There we have it then. We'll be adding decentralized finance to the jail this week. And we'll see later down the line if anyone wants to come on the show and advocate to free this one again. But for now, Simone, thank you so much again for joining us for the podcast today. It's been a pleasure.
Thank you so very much for having me. Thank you.
Well, that's all we have time for this week. Thanks, of course, to Simone for joining me. As for FinTech Futures, you can find us online at fintechfutures.com. And be sure to follow us on LinkedIn to keep up with the latest FinTech news. If you like this podcast and our other episodes, you can subscribe on Apple Podcasts, Spotify, SoundCloud, or your favorite podcasting service to get notified about future episodes. Thanks as well to Arama for editing this podcast. You can check them out at arama.tv. As always, thank you very much for your support, and we'll see you soon for another episode of What the FinTech. But until then, goodbye.